Okay, so Bitcoin ETFs, they're absolutely everywhere you look right now, aren't they?
The buzz is huge.
Right. And it really makes you wonder, are they actually changing the whole game for crypto investing?
Mm.
Or is it just hype?
Well, that's the big question.
We got this really interesting article here digging into insights from Bitwise and some others, and they argue it's more than just a market blip.
Yeah, they're suggesting it's a real fundamental shift in how, serious investors are starting to view Bitcoin.
Exactly. So our mission today is, well, to cut through all that noise. Let's try to unpack what's really happening, the shifts, practical and psychological, that these ETFs are causing. We want to give you, listening in, a clear, efficient way to get your head around this.
Absolutely. And what's really fascinating, I think, is how these ETFs seem to be kind of rewriting the old script for Bitcoin cycles.
Ah, okay. Let's jump into that then. This idea of the investment cycle is changing. People have talked for years about the 4-year Bitcoin cycle, right? Tied to the halvings.
Right, the halving events. For anyone newer, that's basically when the reward for mining new Bitcoin gets cut in half, happening roughly every 4 years. It's historically impacted supply and, well, price.
But the article is saying maybe that's becoming less rigid,
Yeah.
less predictable.
Yeah, exactly. It points to a whole series of other big catalysts that have pulled serious money into crypto over time.
Like what?
Well, think back. You had platforms like Coinbase getting started. That was huge around 2011. Then Ethereum launching in 2015. That opened up so much.
Right.
Then DeFi summer, decentralized finance kicking off around 2019. And now these Bitcoin ETFs, especially after that Grayscale lawsuit decision in 2023.
Okay.
And the key point the article makes is these newer things, especially the ETFs, seem to be driving more sustained structural capital flows. It's not just short bursts of excitement around a halving date anymore.
So it's becoming less about those specific events and more about these ongoing structural ways for money to come in. That feels like a big deal.
It really does. It's just a maturing market.
And speaking of getting money in, the article paints quite a picture of the early days. Firms like Bitwise really facing an uphill battle just getting institutions to listen.
Oh, completely. There's this statistic in there. Bitwise apparently had to meet, on average, 10 times with a potential client before they'd even consider investing.
10 times. Wow.
Yeah. Imagine that persistence. It just highlights the deep skepticism they were up against back then.
It really shows a fundamental barrier needed breaking down. So what was it about the ETFs specifically that finally cracked that wall?
The ETFs were the turning point. The article uses a great analogy. It compares it to Facebook's IPO.
Okay, I like that. How so?
Well, before the IPO, investing in Facebook was tricky, mostly for insiders, VCs, right?
Right.
The IPO made it accessible to almost anyone with a brokerage account. It legitimized it as a mainstream investment overnight. Bitcoin ETFs have kind of done the same thing for Bitcoin.
That IPO moment idea really makes sense. Okay, let's get into the nitty-gritty then. How exactly do these ETFs change the game? Practically? Psychologically?
Well, first and foremost, they just gave it a huge dose of legitimacy. For a lot of traditional finance folks, Bitcoin felt, well, inherently risky. There was this underlying fear, maybe overblown, but real, that it could just go to zero.
Uh-huh. The weird internet money thing.
Exactly. The ETF structure, because it's regulated, it's familiar, traded on normal exchanges,
Yeah.
it directly tackled that core fear, the fear of total loss.
And it made it easy, right? You just buy it in your existing brokerage account.
Precisely. Lowered the barrier to entry massively. No need for new wallets or understanding private keys for the average investor.
So it's less about Bitcoin itself suddenly becoming safe, and more that the way you invest in it now feels familiar and, well, safer.
That's a huge part of it, yeah. The article touches on this interesting psychological point. Investors are often more comfortable with regular market ups and downs, market risk, than they are with the risk of looking foolish or, unsophisticated by buying something totally unfamiliar.
Ah, right. The career risk aspect for advisors too, maybe.
Definitely. The ETF wrapper provides this crucial layer of psychological comfort. It fits within their existing frameworks.
Okay, so the gates are kind of opening. The deep fear is lessened. So who's actually buying? Is it just retail investors finally piling in easily?
It's actually pretty diverse. Retail is definitely a big part, attracted by the convenience, and yeah, the low fees are a factor. Bitwise's ETF, for example, is only 20 basis points. That's super competitive.
Yeah, that's low.
But we're also seeing significant institutional interest. Hedge funds are in there, often doing things like basis trades, basically exploiting small price differences between the ETF and actual Bitcoin.
Okay.
And then you've got family offices, and crucially, RIAs, registered investment advisors. These are the people managing money for individuals and families, and they're starting to allocate.
That RIA adoption feels really significant for long-term flows. And that low fee, 20 basis points, that really does democratize access compared to, say, older fund structures.
Absolutely. It changes the calculation for a lot of people.
Now, let's talk about that perception shift. The article mentions Bitcoin moving away from being just weird internet money. How much have the ETFs driven that change in the financial world's eyes?
I think they've been pivotal. By providing this regulated, easy way to invest, they've helped Bitcoin transition. It's gone from this niche tech thing to something closer to a recognized financial product.
Uh-huh.
The comparison to a tech company pre-IPO is pretty spot on, I think. Before going public, a tech company might seem speculative, only relevant to tech enthusiasts. The IPO brings scrutiny, broader acceptance. It signals maturity.
And the ETFs did that for Bitcoin, in a way.
In a way, yes. Served a similar function. It brought it into the regulated spotlight.
And that links back to reducing that left-tail risk idea, doesn't it? That fear of a complete wipeout.
Exactly. The article argues that the perceived risk of Bitcoin just collapsing entirely, going to zero, that left-tail risk has been significantly reduced in investors' minds because of the ETF structure and the major players involved.
And when you take away that extreme fear, it opens the door for much wider adoption.
Right.
People start actually considering it for a portfolio.
Precisely. It becomes a strategic allocation discussion, not just a wild gamble. Removing that psychological barrier is absolutely critical.
Okay, so the landscape is definitely changing. But now you've got these huge players, BlackRock, Fidelity, jumping into the ETF space. Where does a company like Bitwise, which was crypto-focused from early on, fit in? How do they compete?
That's a great question. Bitwise is really leaning into being the crypto specialist. Unlike the giants who offer everything under the sun, Bitwise's entire focus is crypto.
Right.
So they position that as their strength. Deep expertise, agility. The article mentions their transparency, like publishing their wallet addresses.
Oh, interesting.
Yeah, and their support for the actual Bitcoin ecosystem, like funding open source developers. They also talk about creating custom solutions, derivative strategies, things like that, for bigger, more sophisticated clients.
So it's less about being the biggest and more about being the most focused, almost like a specialized crypto partner.
That seems to be the strategy. More of a boutique feel, perhaps. They're not just selling a product. They aim to be a partner, especially for institutions, even building custom-managed accounts.
Huh.
Plus, that community focus, investing back into the core tech and developer communities, probably resonates with people who care about the crypto ethos itself.
Yeah, that makes sense. A blend of TradFi service with a crypto-native commitment. One last interesting point the article raised was this difference in sentiment between institutions and retail investors. What's going on there?
It is interesting. The article highlighted potential disconnect. You might see retail sentiment online swing wildly, maybe getting quite negative sometimes.
Happens all the time.
But according to the piece, sentiment among institutional wealth managers back in February 2025 was described as maybe the best ever. Extremely positive.
Wow, really? So even if retail is getting jittery, the institutions are feeling very confident.
It suggests a strong underlying conviction there, a longer-term view, perhaps less swayed by the daily or weekly price action that might dominate retail discussions online.
So institutions seem to be playing a longer game, looking at fundamentals, while retail might be more reactive. That's a key difference.
It certainly seems that way based on the snapshot. It raises questions about who's really driving the narrative long-term as the market matures.
Absolutely. Okay, so let's try and pull this all together. It really feels like these Bitcoin ETFs are much more than just a new way to trade Bitcoin. They seem to represent a real evolution.
I think that's right. They've built a significant bridge between traditional finance and crypto, made Bitcoin feel more legitimate, definitely more accessible, and, crucially, psychologically easier to handle for a whole new range of investors.
From big institutions right down to individual savers using their regular brokerage app.
Exactly.
And that psychological shift, moving past the weird internet money label, that feels like the most profound change, maybe, with potentially the longest lasting impact.
I agree. Once you remove that deep-seated fear of total failure, it opens up a much more serious, strategic conversation about where digital assets fit in a modern portfolio. It's undeniable.
So here's something for you, the listener, to think about. How might this deeper integration with traditional finance continue to shape Bitcoin? Will we see more stability, maybe new, even more sophisticated products built on top of these ETFs? What new opportunities or maybe even new challenges could arise as Wall Street gets more and more involved? Definitely something to keep an eye on as this space keeps evolving so rapidly.